It's not often that we're anticipating revenue growth in excess of 200% again for a company. How can we live up to it?
Yeah, I mean, look, there has been no lack of demand validating signals throughout this last quarter. Its largest customers, the cloud providers, hyperscalers, have all increased their outlook for their CapEx spending in AI this year. Its supplier, the biggest supplier, TSMC, has given really positive commentary about AI demand continuing for the rest of the year. When you look, there's a couple of other tailwinds, as in sovereign entities and other regions outside of the US government entities increasing their spending in AI. So across the board, we see significant, strong, real demand signals coming in for the company, and we feel really good about them coming in this a solid beat and raise this print.
Supply as well going to be equally strong? Because that seems to have been the limitation, really, for the story of Nvidia.
Yeah, I mean, look, supply has been coming on significantly each quarter, and that's what we expect. Definitely, as so far, they have executed really well without any big miss, I would say, in terms of supply coming on to the numbers, at least what the street has. So at this point, we don't see significant risk. Look, again, this quarter, we saw H100 lead times reduce or close to about 9 to 10 weeks. They now have the H200 in the mix as well. And coming over this end of second half of this, they'll have more products from their Blackwell architecture in the mix as well. So they have more levers to play with now in order to sort of meet those numbers if one of the supply chain sees any issues.
Let's talk geopolitics as well, because you focus in on the incredibly powerful chips and overall architecture being on offer. But China, for example, big customer, and it doesn't want, or at least it can't have, the most powerful chips that Nvidia produces.
Yeah, I mean, look, I think in the near term, the geopolitical is, in a way, I don't want to say directly, but could be a positive. Yes, the China regional preference is not to use Nvidia chips, but when you still think about the customers in China, they would still, if they can, want to use Nvidia chips because they are the best out there. So we could anticipate to see some sort of a pull in fear of more restrictions coming either from China or the US. So that could sort of pull in the demand a little bit early and help Nvidia in the next few quarters.
What's interesting is we had an AI cloud computing startup on the show on Friday, CoreWeave, raising a ton of money, but it's mainly working with Nvidia here. And the CEO telling us that everyone wants an Nvidia chip. Yes, you can talk about AMD. Yes, you can talk about some of the competitors in the market. But ultimately, that's where the demand is. Do you agree? Is there anyone who's starting to show the competition angle, able to muscle in on some of the market share?
I mean, like you name it, AMD is sort of the only other real viable merchant GPU silicon provider right now. But Nvidia still has the lion's share, and we don't see that changing significantly this year or next fiscal year.
What has been, of course, one of the key bottlenecks for many in terms of the overall power of generative AI has been energy, and it's been supply side to chips. How much is that something we're likely to hear discussed on the call, analyst consideration, that really this is now the one that needs fixing, ultimately, the impact on the environment or indeed impact on the cost of energy?
I mean, it has become a rising concern across the board. I don't think we'll hear a lot about that in NVIDIA calls specific. I think we hear a lot about in its customers' calls, to be honest, at this point, because even if a real magnitude increase in power every generation of NVIDIA chips, their total TCO continues to get better and the efficiency continues to get better.